Hello, chart watchers and Decision Point faithful. Welcome to this Monday, December 2nd, 2019 Decision Point show with your hosts, Carl and Erin Swenlin. We want to thank you for joining us today and hope you will return every Monday at 5 p.m. Eastern so you can see what we have going on here with Decision Point. All right, so let's take a look at the agenda, and I'll introduce you first, though, Dad. What are you thinking of this market?
Oh, well, it's nice to see a down day for a change.
Especially, yeah, when you're feeling bearish, that's,
Right.
I feel like I've been waiting for this for a long time, but we'll have to
Enjoy it. I
talk
think
about,
it's probably over.
I know, I think you're probably right, but we'll look at some of those charts and give you our perspective on them. We'll start off with the Decision Point scoreboard. I'll review that for us. And then we did have some monthly charts. They went final last Friday at the last day of the trading month. We let those monthly charts go final, and whatever signals are on there as far as the PMO become final as well. So we did have two signal changes on those monthly charts. So I'm going to show you those. I wanted to go through quickly the sector scoreboard and what I'm seeing as far as signals go on each of the sectors. I'll just be looking at the candle glance as well as our scoreboard. And then Carl's going to take over at that point. He is going to be looking at the S&P 500, DP indicators. Of course, I'll probably chime in there a little bit as well. And then as our bonus today, there were some stocks that have been in the news. And so we've, depending on how much time we have, we'll cover some of those as well. Okay, so let's get it started. Decision Point scoreboards. And I know I moved the right one onto here, and this is the exact wrong one. Anyway, let's just, let me go and skip that one. The DP signal scoreboards that are wrong here. Let's go over here. They're all green. Every one of them is all green except for the NASDAQ and the Dow Industrials. They're still holding on to those PMO sell signals on their monthly charts, but these did turn green. And like I said, we'll go look at those charts. This is the sector scoreboard. It tells us, it's kind of almost a summary of our golden and silver cross, really. The intermediate term trend model, it's on a buy when the 20-day EMA is above the 50-day EMA. So as you can see, we have all of these on buys. Real estate and utilities are on neutral signals, but we'll take a peek at those candle glance charts and see how far away they are from moving to or back to buy signals. And of course, as far as our long-term trend model, the 50 is above the 200-day on these buy signals. This sell signal for energy is the 50-day EMA being below the 200-day EMA. All right, so I'm going to go ahead and we're going to move in and look at some of those monthly charts that I was talking about. So let's go ahead and we'll do that now. So I do have these in the live chart list that you can get to from our articles page. I have quite a few different charts in here right now, but we're going to just stick to looking at the monthly charts. So I'm going to start with the Dow and just point out, as you can see, the Dow's monthly chart not looking quite as well as far as the PMO goes. You can see that it has turned down below its signal line. This would be the third time we've seen that happen. Typically, a top below the signal line is especially bearish, in my opinion. But we're looking at just sort of a twitch down here on, you know, we've had a interesting week already with the market moving lower, and that for the month we were also down just under 1%. It looks like so. All right, and the NASDAQ 100 has also not got that PMO buy signal yet. It's still holding on to the sell signal that was there last year around this time. And you can see it is turning up. It is trying to get that crossover. The margin is starting to shrink. But here are the OEX monthly chart. And as you can see, nice strong move to the upside on the PMO for the monthly chart. And this is a new buy signal that came in. Actually, it should say the 29th because that was the last trading day. I'll probably fix that one. And then the S&P 500, very similar look. We do have a PMO buy signal on the monthly chart. I have marked previous buy signals. This strikes me as very similar to what we're seeing here, possibly here, because you can see we've been moving mostly sideways. And, you know, we still get some really good movement off these buy signals typically. But I'm wondering how much is really going to come off of this particular one.
Right. You know, those PMOs, uh, especially the one for the S&P 500, it's been moving sideways for over 2 years. And, you know, the, uh, I can't think the name, the little chart in the corner.
Oh, yeah, the thumbnail.
Yeah, the thumbnail. Yeah. That one kind of exaggerates the movement. I mean, it does help us zero in, but if you look at the longer range portion there, it's been moving sideways. And so these little flips up and down through the signal line really are not necessarily important.
Right, right. When you're seeing this sideways movement, it's just you're so vulnerable to whipsaw, not necessarily on a monthly PMO, but in general, you know, when you start seeing those twitchy movements around the signal line, yeah, they're not quite as meaningful. So I'll be interested to see how this one sticks. All right, quick look at the sectors, and I'm going to do that from our homepage so you can see that how I find this. All right, you go to the sector summary, and then this gives it to you in a table, but I like to come down here and use the sector candle glance. And I have my candle glance set up for the DecisionPoint indicators. Right here, you can see how you can customize your candle glance charts to look like whatever you want, mine if you'd like. But what I've got here are the 20, 50, and 200-day EMAs on the candle glance. And then this, of course, is our PMO. And this is a 6-month chart, just in a thumbnail form. But it gives us a really good picture of what's going on with all of these sectors and, you know, where the strength seems to lie, where we might have some problems building, that sort of thing. So looking at this, remember, we have all of them on buy signals except for utilities. As you can see, it's a little bit messy in there, but it does have its 20 below its 50-day EMA. And here you go, real estate, XLRE, also having the same problem. I think you could make a case for a double top here coming in off of this rise, but it is a reversal pattern, and so technically it came down into it rather than up into it, but I still think this is looking pretty ugly here for real estate. You know, it's had a good run, but maybe we're looking at some trouble here.
How are these charts sorted? Just
however, StockCharts puts them up there.
Okay.
Okay. Yeah, so they're not alphabetical, clearly. You can see XLK, we just got a PMO sell signal coming in on that. Energy is starting to fail a little bit again here too, although it is on a nice rising trend. But really, the utilities are starting to soften here. They're moving sideways. They really haven't broken down quite yet. I'm thinking we're going to see that. If the market does make the turn after this likely selling exhaustion, we might see these move a little bit higher. But at this point, utilities is not really the space that I'm looking at. I've been more interested in what's getting ready to come out of, you know, financials have started to really perk up. And I've been a fan of staples. I know they've been moving mostly sideways, but at this point, I've got a couple stocks in there just because I feel a little less, I'm risk averse right now, and I've been looking for a really deep decline on the S&P 500, and I'm thinking now that this might be the best we're going to get as far as a big decline. So, all right, I think that covers my section of what I wanted to point out today. So I'm going to pass it over to you, Dad, to share the screen, and we can chat about some of the charts you're looking at. Okay. Especially those indicators, because I have some thoughts on those too.
Okay, here we go with a close-in chart. See, we broke a trend line today. The PMO is getting ready to make a crossover. And I'm still wondering if we're going to get any more downside out of this, because it's been so hard to get it.
Yeah.
The biggest move we've had in what, weeks anyway, many weeks. But notice there's a negative divergence on the OBV. PMO is about ready to cross over. We got, okay, I need to update this chart because I know that the volume has updated. S&P 500 total volume is still, considering the selling, this is kind of a skinny volume peg here. This is for the ETF SPY, and you see that there's it did have a pretty good spike on the volume today, but that's why I track both of these. This tells you what's going on with the ETF. This tells you much deeper. It tells you what's happening inside the main index there. Got a breakdown on our VIX, breaking down through the lower Bollinger Band. I'll talk about that more in just a minute, because that's where we think, okay, it's overbought and we're going to get a bounce. But that's not always what happens.
Yeah.
In fact, and I'll show examples that look a lot like where we are now. This show, this is a 1-year chart, and you notice here we go with our breakdown today. We got similar breakdowns here and here, so that's showing you we had some pullbacks in both of those spots, and we may be getting something like that. Even though this wasn't in a choke, but we got choking here and here and here. So I think that, yeah, there could be some more to this move.
Mm-hmm.
I don't want to see that. Let's go right on to the climax chart. Okay. Today does look climactic, with the, well, on breadth, vast declines, VIX, but it doesn't look, it's not climactic here on the total volume. And of course, new highs are out of the running now, and new lows are too, because we're too high. The market's too high to be showing a lot of new lows yet. But, so this is somewhat climactic, but not anything to get right home about. Short-term indicators. Notice how different these look from prior peaks. Just very even, steady up moves, and that's what you get out of the indicators. They get real close together. It's close to zero, and these are flat. You don't see anything like that back here. Notice on the cardinal price tops, I put the vertical line so I can keep track of what's happening before and after in a glance. And the trick on this one here, you're constantly moving it to the right when the market's going up. These are not updated yet, these two here. So nothing we can do about it. It just takes a long time to grind out the numbers. And these are just going to be, take a little while before we get them.
Yeah.
The intermediate term indicators, we've got lots of negative divergences here. And this is intermediate term. Slightly, I don't know if I need to tilt that. They're really more looking sideways, but these, the ITBM and the ITVM and the Silver Cross Index are showing a negative divergence. Nothing, when you look at the Silver Cross, that's what's that, a 72% on that are bullish in this, in the intermediate term, stocks bullish. That's not as great as 80%, or 80, more than 80%, but it's certainly enough that you're not, you don't say, watch out, look out below. This could be a warning for something like that, but it's just not that serious.
Yeah, the deterioration just doesn't seem to be enough. There's
Yeah.
still support as far as participants go.
Okay. So I did prepare some charts that were in the news. This chart is from Erin's diamonds.
Diamonds, yeah, or diamonds, yeah.
It's from last week, and this is I picked these out because double bottoms are it's a formation I really like to look at as the potential long. I think the problem with this double bottom is that just there wasn't enough selling, and of course you picked it as just we're hitting the top of the market. So, we always look what happens the first 30 minutes of the market open. And I don't think these would have made the cut on Friday, I guess it was. Yeah.
Right. Yeah, it's, that's one of the things we talk about in those diamond reports is that, honestly, and let's face it, I think most of you who are investors out there know that your odds for success are a lot higher if you're going with the trend in the market. And, it's been helpful for diamond selection, diamonds in the rough, for the market to be heading up. But now we're starting to see a downturn. So it's going to get a little bit more challenging for me this week, I think.
Right. And still with the Silver Cross Index being above 70, you still, the odds are favorable for you picking something that's going to work well. Another one you had last week is NHI. Same problem, really. You did get a nice double bottom, and PMO was bottoming. That looked very promising, but then of course we got what we got today.
Yeah, and if you look at that double bottom in the thumbnail, you can see the bottoms were declining and the OBV bottoms were rising. So, I mean, that was a positive divergence too. I mean, it looked like it would be a pretty good setup, but there you go.
Yeah, well, it would have been.
Yeah, except for the
days. And GE was one I was looking at for a very long time. When it was selling off here, I was starting to look for a double bottom. And I finally found one. That was the beginning of 2018. It looked promising, but it fizzled. And I got out quickly before, because you expect this continue up, but it went up and then rolled over, and I just sit back with this.
I remember that.
Yeah. And but let's zoom down here a little bit. No, not that. Okay. Now you see this in perspective. Now this is when the broad market had the bear market, and at that point I had lost the focus as I was looking more at the broad market with its problems. But here you did. This is where we got a really good double bottom here. This one I like because it was so broad. This was close together, but it was way more productive. And you notice we had a positive divergence here and in here. And what did it go? It off of that double bottom, it's up 75%.
Mm-hmm.
And that's the kind of thing you're looking for. Got a little double bottom here. Oh, I'm sorry, let me get rid of that. Little double bottom here, but it's kind of lopsided, and I don't look as GE as a long-term hold. I think. Well, let's just take a look at the long term on it.
Yeah.
Here, back in the 90s, when Jack Welch was in charge, and nice parabolic up move, which we know. And back in the 90s, the CEOs of these big companies were kind of like minor gods. They just followed them all over the place, the news stories about them and what they were doing. And anyway, Jack Welch retired right here. You talk about great
I know,
timing.
right? I hope
And
he cashed out.
turned it over to some less capable people. But, this is partially because of the difficulties the market was having in general, but the company was not well managed. And here we go back to this is corrected for splits, but $4 in 2009. Now, oh look, here's another double bottom on a monthly chart, so maybe there's some hope there. But this parabolic kind of thing, it's like people think that they can do no wrong. I mean, this is a beautiful up move, and I think they were over optimistic about everything anyway. So they were due to lose about 50% off of that parabolic move, and they did.
Mm-hmm.
And then some. Disney was in the news today. Here we
This was a
had,
diamond, by the way, a couple of weeks ago.
yeah, was it?
Mm-hmm.
And we had a head and shoulders pattern, which executed and then aborted very quickly. And in a bull market, I don't pay much attention to bearish formations like this. I don't, in a bull market, you don't expect that they're going to be profitable.
Yeah, you should always keep that in mind. If you see a bearish chart on a stock that's got a 50-day well above its 200-day EMA and all of those things, you just have to realize that it's in a bull market configuration. Expect a bull market, a bullish pattern to execute the right way, but a bearish pattern may not necessarily execute if you're in a strong uptrend.
Right. PE on this stock is overvalued. I know a lot of people don't like my comments about PE, but that's my range. 10 PE is undervalued, and 20 PE is overvalued. And let's just look at the weekly chart. Notice we've got some very optimistic outlooks here, some really huge up moves, and that's not going to last. There's too much. The Disney Plus channel, is that what it's called?
Yes, Disney Plus was their latest and greatest.
Right, and then they're all excited about that. And of course, they own the movie business. And
right.
Yeah.
And ESPN and Hulu and
Right. But good things come to an end. Now, I would call this a parabolic move. We're looking at a monthly chart now.
Mm-hmm.
But it didn't, it broke down, but this is what Ken and Gammage used to call high-level consolidation. It's not as regular as we would like to see, but that's what can happen with a stock that has not been overhyped.
Mm-hmm.
And Disney, I don't think is overhyped at this point, but it's not
Overbought.
extremely overhyped. And a couple of other charts I wanted to look at, and this was HB. I classified it humble beginnings. Amazon began as a bookseller.
Yes.
Remember? I mean,
Oh, yeah. I
so,
remember calling you, I think, and telling you, you've got to check this out.
yeah, yeah, no doubt. So, but here we have the parabolic up move, and now high level consolidation. That would be, I wouldn't be looking for a huge crash in any way, unless the whole market's going to hell. But what do we got here? That's pretty good pullback.
Mm-hmm.
30 parabolic break down 37%. So, but you got the double top, so I'm concerned about that.
Mm-hmm.
And the other one, humble beginnings, Google. They started out, as you remember, as a browser,
Yep.
a search engine.
I do not like that daily chart. Oh my goodness.
Yeah, it's
A lot of things wrong with that chart.
Yeah. So what are you looking at?
I'm looking at the head and shoulders coming off of that rally right now.
This right here?
Yep, and it's executed.
Yeah,
It's
yeah.
also broken below that April top back here. Yeah, back in April.
April, okay.
Yeah, way back there. Yeah, it broke
So,
down below that.
Yeah.
I mean, it could find some support maybe at that 1250, 1260, but it could certainly, I don't know. I'm not liking it.
Yeah, let's look. I love looking at weekly and monthly charts. I don't trade off of them or anything, but I still, it gives me context. And
Yeah,
this
so you
is
can see that April top, it did go just below that. That's pretty important.
right. And this is, I remember they basically created a new company. We don't have any more history from back before 2014. That's because of the way they handled the split or whatever it was they did. I forget.
Oh yeah, right.
You know? So we can't really do a monthly chart. This means anything. But right now we're
it needs to hold that level.
Yeah, this is getting toppy right here. The weekly PMO. Going back to here, what do we, yeah, PE is 28.
Super.
So that
yeah, that
my quiver.
Yeah, no, I think that pretty much covers it. You know, I think as we close, my one quick question to you is, are you looking at this as a selling initiation or maybe a exhaustion? What's going on today?
Hard to say. I mean, we didn't get a climax on it, and but this rally has been going for quite a while. And I don't know how much time we have.
I have 20 seconds.
20 seconds. Yeah.
Now it's 10.
We've been watching it.
Yes. Okay. Well, I would recommend you read the DecisionPoint blog, and thanks everyone. Happy trading.